Hello and welcome to this India Today special. This week, the International Monetary Fund, the IMF, has come out with its World Economic Outlook report. And significantly, it suggests that once again, India's growth rate is being slashed from 12.5% to 9.5%, a direct impact of the COVID second wave. But what does the future really hold for the Indian and the global economy? That's going to be our big special today, and I'm joined by a special guest. The IMF Chief Economist, Dr. Gita Gopinath, is our guest today. Thanks very much, Dr. Gopinath, for joining me here on India Today. Dr. Gopinath, on the show, let me turn to the concern first in India, because the IMF has slashed India's projected growth rate for 21-22 from 12.5% in April now to 9.5%. Does that in a way suggest that in extraordinary times you're just not able to predict what comes next? We had the second wave in March to May, and that seems to have sent all the numbers into a tizzy.
Hi, Rajdeep. Always a pleasure to talk to you. So if you recall, when I did the projections in April, I had warned that there were downside risks to our forecast because we were just seeing the start of the second wave in India. And while we had assumed that there would be localized lockdowns, the lockdowns became far more widespread. There were statewide lockdowns. And so that's the reason why we have a downgrade of 3 percentage points. And also coming out of it, the recovery is modest because, again, there are still headwinds there. I mean, there could be, the pandemic is not over, there could be another surge. So keeping all of that in mind, we have a fairly modest recovery for this year.
No, I'm sorry to sound skeptical, but does that mean that, even now, these numbers could go into a tizzy should there be, God forbid, another wave or an increase in the number of corona cases in India? So in that sense, is it becoming much more difficult to give any forecast with any kind of certainty because of the number of X factors here?
I mean, Rajiv, we're living in incredibly uncertain times, and we have a pandemic, a virus that's determining the course of economies. So there is a lot of uncertainty here. But again, it still is the case that India had a very deep recession last year, and we're seeing the kind of growth numbers that we're seeing right now. It tells you something about the gap, the distance that still needs to be traveled. So for instance, even by the end of this year, India is still around 8 to 10% below where we would have projected it would have been in the absence of this pandemic. So these numbers give you at least a ballpark estimate of the kinds of gaps that need to be closed and therefore what kinds of policy actions are needed.
No, the reason I'm asking you this, and I'm sorry to press you on this for a moment, is just that the growth projections in the last 3 years seem to be going all right because so much else seems to be happening around us at the moment. So can we say with any certainty that come December, January, these projections that India will witness an upsurge to 9.5%, which is your latest predictions, can actually come true? They could go horribly wrong, couldn't they, if there is a third wave?
Once again, I agree with you that there is a lot of uncertainty, but Rajdeep, let's compare the numbers here. We had 12.5% in April, and we're down to 9.5. I think there were people who thought that number would come down all the way to 2 or 3%. So there are adjustments that are being made. There's tremendous uncertainty. There's, epidemiological models that try to predict where the next wave will be, have a huge band of uncertainty. But again, like I said, in terms of a ballpark estimate, these are good guiding numbers.
So you still remain convinced that the economy, in a sense, is on the path to recovery, or is it only in really comparison to what was the situation pre-March, that's pre-March 2020, pre-COVID 2020? So in a sense, when you look at the numbers in the larger context, the economy is still nowhere near where it needs to be.
So the recovery that we have right now indeed comes back after a very deep recession, so a negative 7.3% for last year. And then there's a return to some kind of normalcy. But, if you keep in mind that India on average tends to grow at around 5 to 6% on an annual basis, there is still a big gap in terms of where India where India should have been in the absence of the pandemic. And you can see this in employment numbers. I mean, after the most recent wave, you see unemployment rates go up. But it's not just the unemployment rates. I'm also worried about the labor force participation rates, which is if you see the number of people who are even actively looking for work, that number has come down, significantly. And so those are the gaps that still remain. So again, when you have large base effects, you're going to see big, very large numbers. And let me show you, for instance, the quarterly reading that's going to come for India for April through April, May, June. That particular quarter is going to show some very blockbuster numbers. But again, that's keeping in mind that there was about a 24% decline last year around the same time. So these numbers have to be kept in perspective.
So everything isn't really in comparison to what it was in 2020. Let me, one of the interesting aspects of your survey seems to suggest that the countries that are vaccinated faster are the ones where your growth projections are higher. The US up by 0.6%. You're revising your growth projections for UK by 1.7%. So the worry is the world, and that seems to be one of the reasons why you're worried about India, the slow pace of vaccination. So is the world getting divided, according to the IMF, by countries that are vaccinating faster, so better chances of growth or better chance of coping with the pandemic, and those who are struggling with the aftershocks of the pandemic because vaccination levels are slower?
Vaccinations are a very important factor behind this divide that we're seeing in terms of some countries coming back very strongly while others are setting weak to modest recoveries and many falling behind. So we have the advanced economies where on average 40% of their population has been fully vaccinated. That number is 11% in emerging markets. And when you go down to low-income countries, for instance, in Africa, it's less than 2%. So we have this big difference. And we know that for many economies, the service sector is a big engine of growth. And when you're not able to engage in activities in the service sector and you cannot have contact-intensive activities, go to restaurants and so on, travel, tourism, then that poses an important problem. In the case of India, I mean, we should, it is a good sign that we're seeing vaccinations at around 4 million people a day, which if that pace is maintained till the end of this calendar year, that would be a coverage of around 38% of the population being fully vaccinated. That is much better than one would have thought of in January or in those early months. So there is pickup, but again, that's the area where a lot more can be done in terms of kind of accelerating, especially towards the end of the year when you're going to get more and more vaccines available.
No, the reason I'm asking you this is that you're seeing in the United States a resurgence of the Delta variant, cases up again. You're seeing a bit of that in the UK as well. I'm just wondering, with the world still oscillating from the aftershocks, one possible wave after the other, I come back to it, Dr. Gopinath, is anything predictable anymore? Can you really give any of these growth projections with any kind of certainty, or how much of this is based on the concept of hope and optimism, both at the fund as well as in industry?
So Rajdeep, I think that, we shouldn't get all flustered over here. Let's keep in mind that the vaccines still work. When it comes to severe disease, when it comes to hospitalizations and deaths, the vaccines work against all the variants we know so far. So yes, cases have gone up, and you saw that go up really sharply in the UK, despite having close to 70% get one dose. You've seen cases go up by a lot, and of course they're coming down. They're actually coming down fairly rapidly now in the UK. But if you look at hospitalizations, they went up some, but not much. So that's a good, if we can get that in all parts of the world, that is a good place to be. So again, getting in the US, it's only about 50% of the population that's fully vaccinated. So there's a big chunk that's unvaccinated, and you're going to see cases going up. But given that the high-risk population, the adult populations have been vaccinated, at least in terms of hospitalizations and deaths, we are not seeing the same pattern. So it's not the same cycle repeating itself every single time. This time we're seeing waves, but we're not seeing big increases in hospitalizations, again, in parts of the world where there's sufficient vaccine coverage. So I think, there is a hope of getting out of this tunnel, but we really have to get to widespread vaccinations. Otherwise, there can be some new variant, and we will be having a completely different conversation next time around.
Is it that the ideal percentage of population to be vaccinated for the fund to believe that business will take off is around 40 to 60%, that once you've achieved 40 to 60% of your population fully vaccinated, then you believe you can slowly get back, particularly in the service sector or the consumer-facing sectors, to somewhere close to where you were pre-COVID?
I would put the number at 60% to start with. 40% was an intermediate target, just given how much of the gap that need to be closed. I would say 60%. But again, Rajdeep, if you look at many countries, including India, once you get to 60% coverage, you're getting most of the 18 plus population, because these are young population, very young age demographics. The same thing happens in the African continent. So when you get to that stage, again, you might have people falling, you will have cases going up, people fall sick all the time. You have the regular flu too. As long as it's not showing up in overwhelmed hospitals and deaths and severe disease, then we are back to functioning normally.
That word normal, of course, has a lot of connotations, especially in the service sector, especially in key sectors like travel and tourism, which have taken a hit. So presumably what you're also going to see is a lot of sectoral divisions. Am I correct that when you put these numbers out, that you believe there are certain sectors that are going to be laggards and are going to take much longer to recover? I just gave travel and tourism as an example.
Yes, that is absolutely a big source of differences across countries. If you are a country that relies especially on cross-border tourism, and there are many island nations that, for instance, do that, then your recovery is going to take longer, because there's going to be the first stage when travel opens up within a country, but it's going to take some time before we get to open borders and people just traveling freely. So that is a very important source of the problem. And of course, we're also seeing kind of supply chain breakdowns as different countries are going into lockdowns in different places. And while in other parts, you're actually seeing very strong demand come back up. So we're seeing supply-demand mismatches, and that's going to be a feature of these next several months.
The other issue that you've looked at is policy support in your World Economic Outlook. And here again, we see divergence. You've got countries like the United States, for example, where there's an impact of a sizable fiscal support in lifting the economy. You've got other advanced economies benefiting from that, but emerging markets and developing economies like India, perhaps struggling to build those fiscal buffers. Do you believe, therefore, the time has come at the end? Countries like India will have to find ways of putting money in people's pockets. At the moment, the approach seems to have been more supply side rather than increasing demand.
The world has spent around $16.5 trillion after this pandemic, not spent it, but made available in terms of fiscal support for $16.5 trillion post-pandemic. And this has just been entirely in the advanced world, and much lesser in emerging markets and even lesser in low-income countries. So indeed, that's the other fault line that we emphasize, which is feeding into this dangerous divergence. In the case of India, indeed, the focus was a lot in terms of what we call below-the-line measures, which is giving loan guarantees without the need for collateral and so on, as opposed to direct cash in hands. But that said, the Indian government has responded with agility in this. For instance, in the second wave, what we did see was, the extension of the free food rations. That's expenditure that comes in. I think it was very good for the government to procure vaccines, for at least 75% of the vaccines that were going to be procured, and provide them for free to the states. So I think those are very important steps, and those are the kinds of actions that will continue to be needed. The way I see it is that there's still scope to do more. India can and should do more in terms of providing direct income support, especially to low-income households, to small and medium enterprises. And the education sector has been very hard hit in India in terms of the number of children who've been out of school. If you compare India to many other countries, in fact, children have been out of school in India for a very long time. And that has a big hit to their learning. And so that's another area which needs to be addressed.
So are you saying two critical areas, micro, small enterprises in the informal sector and education as critical areas where there will have to be greater investments in the next year to sort of ensure in a way that you're not just focusing on getting jobs back, which is critical, but also improving the quality of education available?
Yes, and I would add to that, cash transfers to low-income households. If you look at the number of millions that have been added to extreme poverty, because of this pandemic in India. I mean, we have over 2020, 2021, our estimate is around 29 million. That has to be addressed. So there will be need to provide income support. But again, I think what's important is that in the process of doing all of this, it's also very important for India to kind of announce a very credible medium-term fiscal consolidation plan with kind of very clear measures of what will be taken over the medium term, which is over the next 4 to 5 years, to bring down the deficit to more normal ranges and to bring down the debt. So if the two are done together, then that gives assurances to markets, that keeps your financing conditions favorable, and you need to do what has to be done to strengthen this recovery.
There's a sense, though, Dr. Gopinath, that China seems to be emerging out of the pandemic much stronger. What is it that the Chinese seem to be able to do to be able to emerge much stronger than other countries in the world?
But China controlled the pandemic very quickly. They were the first country to be hit by it. And there was some surge in cases, but they brought it down very quickly. And they've been able to keep that down until now. I mean, they have very, very strong contact tracing, very quick localized lockdown measures. So they've been able to maintain it. And then recently, they've really taken off on vaccinations. At the current pace at which they're going, they should be able to get to covering 70% of their population by the end of this year, even maybe higher. So they are on the health front in terms of that response. It's been incredibly strong. And they've also done a lot in terms of public investment spending to help with the recovery. But that said, there's one feature about the Chinese recovery which we kind of caution about, which is that it's very heavily focused on government-driven, public investment-driven, and much less on private consumption. And we should really see that being handed off to the private sector, so that this turns out to be a durable recovery.
One other outlier, South Africa, fully vaccinated population only 4.3% lower than India's 7%, but you're revising their growth up by 0.9%.
Well, in the case of South Africa, they've benefited from the increase in commodity prices that we've seen recently. India is, on the other hand, an importer of commodity prices, so it doesn't help in that dimension. But South Africa, being an important exporter, they have benefited from a very sharp increase in commodity prices after this, the collapse last year. So that's one of the factors behind the upward revision for South Africa. But that said, I actually would say that for our forecast for South Africa, there are important downside risks. There was another big wave that we saw recently, and that could affect the forecast going next time around.
The one other issue that I want to just get you on is inflation. This is a big concern in the United States and several parts of the country, certainly in India at the moment. In fact, in India, the worry is we're heading towards stagflation. That's the view of some economists at least. How concerned are you about inflation not being under control? And now then if you push in, call in for more fiscal stimuli, that will become an even greater concern in the months ahead.
Inflation is a concern in many parts of the world. I mean, in the US, for instance, it's probably the main topic of discussion is what's going on with inflation. India, too, has been hit by elevated inflation. It's coming from a combination of things. Food price inflation is high. We've also seen, supply shocks, supply chain breakdowns. That's also putting pressure on prices. What is concerning is the fact that core inflation is high and quite sticky in India. So that's an important feature to keep in mind. But that said, the question is, what does all of that imply for monetary policy? And our view is that given the amount of slack in the economy, given how much of a gap there is between employment now and where it should be, monetary policy should remain supportive, but at the same time, give very clear guidance on how they will react over the next several months to inflation becoming even more of a problem. And the RBI actually has provided some very good forward guidance on this, but this is going to be a tricky area and to closely monitor.
As we come to the end of this, I just want to come back to where we started. You know, there is a belief that the IMF is talking up the Indian economy when the reality is very different. I meet people on the ground who say, look at how we are suffering. Jobs are down, incomes are down. We are having to close down small businesses. And you tell us, as the IMF did in April, that we are going to get into double-digit growth. You know, there is this alternate reality being created. The reality on the ground is different. What will you tell them? That, you know, are these, is there a huge mismatch between the reality and the hope?
I'll make a couple of points, Rajdeep. Firstly, I think when people read the numbers, they really do have to put it in the context of a very deep recession last year, a historically deep recession in India. So when you add the numbers together, when you kind of look at what's happened cumulatively over 2 years, I would say that, you know, there is some recovery, but there is a long way to go. So it's not incongruous that on one hand you have a lot of people who think that they've been very hard hit, and the numbers, because there is indeed, like I said, a huge gap between where India should have been in the absence of the pandemic and where it is now. So please, you know, keep that in context. And a lot more needs to be done in terms of policies and in terms of addressing the weaknesses in the different sectors. The second part I would point out is the fact that, yes, there's some things that don't show up in the GDP numbers. For instance, the informal sector, just much harder to measure. And they are getting harder hit. You know, there's extreme poverty. There's distributional consequences. I mean, the stock market is booming, but then there are MSMEs that are in very bad shape. So there are all these distributional aspects that also need to be taken into account when you want to get a full picture of how the economy is doing. So, I mean, those would be the 2 points I'd make.
In 1 minute, if I were to ask you 1, 2, 3, the 3 things that you want to see India do right away?
I would say first, provide additional support to low-income households. Second would be to, you know, some more spending on the health sector and also for MSMEs. And I think it's very important for India to set out, and on education, I'm sorry, I missed that. And then I think it's very important for India to credibly communicate a medium-term fiscal consolidation strategy, which is one implement now, but it's a good signaling device of how they will get to lower levels of deficit. And that combination will help propel a stronger recovery. Okay, final question, Dr. Gopinath. I'm going to record this 3 months from now when you come up with your next sort of outlook. Are you more optimistic than you are today? Or do you believe that there could still be those X factors? I repeat, the third wave, a slowing down of vaccinations or non-availability of vaccinations to certain parts of the world, including India. Are those worries, or do you believe the worst is over? I think we're still in the period of uncertain events. There are some parts of the world where, given the amount of vaccination they have, I would say that the worst is behind and we're in a better place. Again, as long as you do what needs to be done, we know that vaccinations work. We need to get many more shots in arm, and if we can do that in the next 6 months, then we are in a far more durable recovery, and we can put this behind us. But unfortunately, I don't control all the levers over here, so I just don't know where this will go. Okay, I think that's fair enough. I think you are putting in enough safeguards this time and caveats. And I think that is important in the times in which we live. These are uncertain, extraordinary times. But I appreciate, Dr. Gopinath, the effort that you and the IMF are putting to give us this economic outlook, because it at least gives us a sense of where we stand at the moment. So thanks very much, Dr. Gopinath, for joining me then on the show. That's it on this India Today special. We'll keep tracking the Indian economy and, of course, the news. Thanks for watching. Bye for now.